Last year's turn here, this was the decline in question. I'll throw up a quick rectangle so we can see the whole correction lasted, in this range for the whole year pretty much, but the extremes of the correction completed. We get the exact numbers for you here. Let me figure this out. So high was a 101.75. No, that's not right. Oh, that's just for the individual candle. The square doesn't give me the numbers like this does, a trend line. So the whole decline before, after the Fed announcement, compared to, because we didn't break below the low that formed there, and of course this is a very different market, but I mean, is it though? That's the big question. It was clearly corrective, choppy to the downside, and it was for a, let me activate this drawing again, trend line, and tell you exactly what the stats were on it. Okay, so we market effectively declined 469 pips off of highs. It took 33 days, or 24 daily bars, so it took a month. And it was at a 50, or roughly a 60% angle. This year, we have now done 52% angle, so a little bit steeper. Right? It's a little steeper, yeah, or a little shallower. A 330 pip pullback. Get the exact, yeah, 331 pips, and done this for 3 days. So what did I say it was before? High to low here. Change was 462. So a somewhat similar pullback, because this was when the Fed announcement was made, approximately. The market was here-ish, somewhere right around here. It rallied a little bit and then sold off. Oh my gosh, so many drawings. It made a high shortly thereafter, because, oh, that's what it was. Yeah, so the Fed announcement to taper, that's what it was, FOMC, back in December. They made the decision to taper. The market still rallied up to a new high and then sold off. Well, what, didn't we just have that situation in September? FOMC, they tapered again, another 10 billion, and of course rallied up to a new high and has started to sell off. So with that being said, I mean, I think that now more than ever, I see an even greater opportunity for this market to actually pull back a little bit more into this 105.80 area. This is a major support. And of course, before, guess what level of support we, traded into? This is like a complete repeat. It's kind of crazy. If this was your triangle, and this was your triangle here, right? You have your two triangles. This was your termination of the triangle, and this was your termination of the triangle. Well, guess what level held in the dollar-yen as support? Maybe this was the termination. Doesn't really matter. The idea is that it pulled into the full 50% long and actually flagged that level for the entire year before trading higher. Actually, or was this it? It's not a huge deal. Point is that the market came to, oh my gosh, market came to this point of compression and then burst. Market came, even if it's not triangle, it's not a big deal. Market came to this point of compression and finally burst. And you had almost identical situations in both. We rallied up, Fed announcement into the Fed announcement. Fed announcement happened, the market turned, pulled back 50%. We rallied up into the Fed announcement. It was a buy the rumor, sell the news event, and we've sold off now. And the question is, where does support come in? And of course, when we look back, did the market back then get reactions from their extended longs, like continuation? And the answer is yes. We had full long, an extended long here, get a reaction at the 102.93s, which maybe is where we are today before we had a subsequent rally, and then the market fell off again. So as that WXY, which actually ended up being 1, 2, 3, 4, 5, 6, 7 swings down for the yen. But this is just 3 right now. So if this is 1, 2, 3, then we get that 4, 5, 6, and 7. Maybe it does another 7 swings, but it was about this time. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. Well, we just started our next new trading day, but 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days into this low. 1, 2, 3, 4, 5, 6, 7, 8 trading days into this low. So about the same amount of time that it took to do the pullback here to this low. It's about what we've done here. So all my point is I'm showing you kind of an analog. The two situations surrounding the Fed announcement over the last 2 years have been a very interesting market, but nevertheless, dollar yen, still definitely a buy for the daily or the 4-hour pullbacks. It's just a question of timing and seeing when they occur. So like I said before, don't throw the farm at this, but there's a good cause for at least a short-term rally before a large decline towards the 105.80s, which, in my opinion, is probably the safest or the easiest way to see this market as a W, X, and then Y, or A, B, and then C down. Not to say it's going to go to 105.80s, because this actually could take you up and 2 through new highs, and if we go through those